Hey guys, we'll be starting in just 1 minute. Hello. Hello again to all my friends. I'm glad you came to play. Our fun and learning never ends. Here's what we did today. Um, okay, guys. Welcome back. Thanks. This is our, let's see, Thursday, Sunday, Monday, Tuesday, Wednesday. I think that's 5 days in a row since our hiatus, right? Miss Munoz?
I believe so.
Yes. So, obviously someone's playing piano. So someone has it muted, so that's nice. So we'll just get started. So today, I'm not gonna bring up the heat map. Miss Munoz can bring it up. Um, if she wants to show you guys. Um, I traded Tesla and then
I'll be able to do it because I'm not in my computer. I'm in the iPad.
okay, I was just saying, yeah, I didn't say you had to. Um,
You can if you want to, though.
no, I don't. I know. Um, so I did NVDA and Tesla mostly today. Um, and the reason I did NVDA because it was following Tesla, but it was a little bit behind Tesla. And I Tesla was going up and I wanted to short it because I had wanted to short it when it popped up in the pre-market. And I thought it would do a little dip down first, but it didn't do it as long as I thought. So I got caught with it going up. So I decided to stay in it and short it uh as it reached this peak, thinking that it would come back down like it usually does. Um and I got into NVDA and followed NVDA the correct path by going long and made a few dollars there. Um, and basically that's it. I got out at my last bit of um NVDA at 135. It got to a high of 136.45. I was going to get back in at around 135.50. Um and just stay to the end of the day. But I ended up not doing that. I believe it or not, I got a few shares of this crazy thing called Domino's Pizza. It was tanking, and I was like, oh, let me see if it continues to tank. And then of course it popped back up. But I did one of the bad mistakes that you guys do have to look out. If you do see a stock like let's look at Domino's Pizza here. Um, it basically popped up and then it was going down most of the day. And then around what is this? Probably
Why were you trading Domino's Pizza? You don't usually trade this.
this. I'll tell you the story. Um, and it started going down and after between 2 and 3, and I'm like, oh, maybe it'll continue going down because um it was going down all day when everything else was kind of strong. So I'm like, okay, so I'll go against kind of what the market was doing and get in. And then time I got in, it started going back up. And I'm hoping that it'll come down tomorrow. But the thing that I didn't pay attention to right here, we'll go up to the volume. As you can see, it pops up. And I saw it after I got in, but I was too quick to get in. Because if I had saw the volume, I would never have gotten in. And so the volume was about 207,000, basically, um, less than half of what it is right now. So that tells you everything you need to know. And so the volume's too low, and it's so low that it can easily be controlled by someone with a few, you know, a good amount of shares, a relatively small amount of shares. It can easily be controlled, and that what was happening. A person can trick you, get you in, and then bring it back up because they own a lot of shares. And so then you get stuck. So even if it was trending down, it wasn't enough people in it to diversify things so that you have a fair shot. This volume number right here, you always want it to be around 1 million. If it's maybe 900 and change or whatever, and usually it's always 1 million plus, then I'd probably go with it. But anything under 500, 600,000, wouldn't touch. Um, but in most cases, you want it to be 1 million or so that you get the diversification and you don't get a gluttony of just a few shareholders that own most of the shares um in a situation that you would get in where you only have 200,000 active volume going on. 200,000, the volume is just an indication of the number of people that have shares that are trading, that either have outstanding shares, long, shorts, whatever they may be. So, um, you have to be careful in that type of situation where the volume's low. And again, you have to try to get at least 1 million. Um, Miss Munoz had mentioned why would I have got into dominoes when usually we don't trade this, we just look at it, da 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 da. Other than the fact that it seemed to be uh a stock that was going down on a day that things were pretty strong. Um, I got in because I wouldn't have even looked at it, but someone had um was asking me a couple questions about certain stocks, Burger King, Domino's, stuff like that. And I was like, okay, telling them what the ticker was or how to look it up. And when they asked about Domino's, they asked, "Hey, what's the price of Domino's?" And I'm like, "Well, it used to be like over $500, but let me check." And then when I check, I'm like, "Man, it's at 410. Um, it's going down like crazy." I said, "Huh, maybe it's sliding." And I looked at it, and I'm like, "Oh, it is sliding down." I'm like, maybe I'll get a few shares and watch it." And that's how I got into it. If it had never been brought up, I wouldn't have thought to even had any thought about dominoes. So that's how I got in. So we'll get out tomorrow. And then NVDA, like I said, I was in that because Tesla. And it was mirroring Tesla, but it was behind Tesla by about a half hour or so. So I got in as my Tesla play since I mistimed Tesla. So I'm in Tesla, um, and I'm staying overnight so it can bounce down. I have every expectation that tomorrow it will bounce down like it usually does. But today Tesla was very strong. As you can see, it did its dip in the beginning. Um, but I thought the dip would last closer to 25 minutes or so versus just about 8 to 10 minutes, which is what it did. Usually the way it does its dip is it'll dip and then around the 10-minute frame, it will come back up to VWAP and then dip again until around the 10:55, I mean 9:55, 10 a.m. frame, and then start to go in the direction it would normally go, which would be up today. So I mistimed it and my short, and because of that, I'm gonna hold it overnight and watch it come down. Um and that's that. And now we'll get into those were the only things I traded. Um with NVDA, I made about 500 today. 489. And yeah. So, let's see. So on my quotes list here for um open was really strong today. We know open is a really bad stock, but it moved 16 pennies, which is equivalent to almost 12%. It's under $2 per share. In the past, we've traded this. Um, a lot of people may like this as a trade because it's considered a cheap stock. The reason why we're kind of not traded it anymore is because it's so low to the ground. It's once a stock gets cheap, 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 like let's say, under $5, under $2 or whatever, it's really difficult for it to keep going down lower very quickly. It's basically almost hit rock bottom. So Open is a company that it's kind of like Zillow. It basically does the same thing that Zillow does, but Zillow is more well known and Zillow is more diversified from my understanding. So Open basically just sells houses online, basically, where, they'll sell you a house. They'll be your realtor, but the whole process is online. And they'll sell you the house, you put in details about your house and they'll give you a quote for it. Think of it as Carvana, but for houses. Um and obviously if that's your business model, it's kind of tough because things have hit that business model pretty hard, and also because um a lot of people really aren't selling and buying now too. Um so Open has some issues, and even before when the market was good, before the interest rates rate went up, because everything was automated or online and weren't people involved, supposedly they Open was offering too much for houses when the market just couldn't sustain these houses. And when they tried to sell them, it was hard to sell them. So they kind of got screwed with that. And the stock started going down. As you can see here, I'll just take you down memory lane for people who are new to the channel. Open's a fairly new IPO stock. They opened during COVID back in 2020. Um, and they did go up, you know. It seemed like they opened right at around $10 per share, and they got up, to basically at $40 around you know, 2021. So that's where it peaked at January, February 2021, and then it just started going down from there. Um, and then in the summer, it got down to a low of 14, $15, started going back up, and then in October of 2021 got back to around $25. And then since then, since October of 2021, it's just steadily been going down. And as you can see, we had some levels here. We did trade this stock when it was anywhere between, let's say, $10 and $5. And we kind of traded it basically until it got down to like $2 or something like that. And then we really haven't traded it since then because it was too low and you can't get a lot of bang for your buck. So even if, it's at $2, you kind of gotta wait like it gets to, let's say, this 240 level, it'll come up here and then it'll go down. If you get it over when it popped up to 240, 250 and then came down all the way to 157. Okay, that was pretty good. But you had to wait, what is this, like 3 months or so? You know? Um, did it hit rock bottom at 153 and then start to come back up to this 250 level that it seems to like to die at. So it hit 250 and then it's coming back down and it went down even further to like 130. So it is a stock that's going down, but it's also a stock that's is so low already. It really, you're gonna, as you can see, it moves about 12 pennies per day. So you would have to buy a lot of it, 12 cents per share. Um, and it could take, a couple months or so. So some people think that it wouldn't be worth their time. You always want to try to get shares or stocks that move around $1 a day, because then if you get stocks that move $1 a day, you can easily buy 100 shares of them. And if it moves $1 a day, you're more likely to get $100 out of that 100 shares, $1 per share. That should be your goal, generally speaking. So, so that's open today. Uh, but it had a good day today. So, I still wouldn't say invest in it. If it does pop back, if you do like open and it gets back close to this 250 area, then it may be worth playing around with it you know. It's playing around shorting it, not going long, obviously. But short it at around 250 if you feel confident in it. But I think it's not worth your time. This is Robinhood. It's at 46. It had a good day. It moved almost $5. It looks like $4.30 today. Um, Overall, Robinhood, as you can see, has been doing very well. I am personally glad to hear Robinhood's kind of starting to come back. It was another fairly new IPO. IPO is initial public offering for you people who don't know that. Anyway, but it's when a stock goes from a private company to a public company, offering its shares to the public so that it can raise cash, raise money for its operations. And there's certain rules and regulations they have to follow. Documentation on how the company's doing, they have to provide as a public company and whatnot. Um, but Robinhood, I respect Robinhood a lot because, like I was telling someone, it's one of the first companies that democratize um trading so that people with small accounts, aka myself, my friend here, other people, probably, 90% of people that are trading, it democratized it um by basically allowing you to trade for free without having to pay $1 per share or $1 per transaction or whatever it is. I remember when I first created my Scottrade account when Scottrade was popular, if anyone remembers that. They used to, their claim to fame, Scottrade, believe it or not, and people won't believe this who are very young. Scottrade allowed you to do $7 per transaction. So per trade, it was only $7. That was shocking at that time because before that, it was even higher. Okay. That was the first time that regular people started opening up trading accounts and said, oh, per trade, I can open up an account, buy 100 shares of something, and pay $7. I think you had to pay $7 when you bought it and sold it, or I can't remember, but it was $7 per, maybe it was per buy, and then you could sell it without, I can't remember, but it was, that was amazing then. Even though that was highway robbery when you think about it in today's terms, but that was amazing. And I opened up an account, and of course, you still couldn't do like one share or whatever, because why would you buy something for one share and pay $7, um, per transaction unless it's very expensive uh uh stock. But it started to open up things so that regular people could trade. And fast forward to, and then the prices got down to like $3 and then $1 per transaction or per share or whatever. And then when Robinhood came around, even though initially their platform was only on the app, the mobile app or the iPad or something, you couldn't get it on a computer or whatever or desktop. What they did by allowing people to trade shares for free, it forced all the big players, the big brokerage company players that were making money hand over fist, it forced them to allow poor people, aka regular people that had, $50, $500 in their trading account, $1,000, $5,000 in their trading account. It forced them to also make their trading free because everyone would just go to Robinhood if they did it. So because of that, that opened everything up, and Robinhood paid the price for that because they were smeared. They literally, at that time, many of these companies, they followed up and did what Robinhood did. Then I think they tried to force them out of business. Oh, Robinhood is doing this. Well, Robinhood makes their money by taking a penny off of the trade, and they don't give you the best deal when you press um market order and stuff like that. Yeah, but it was free, and you were charging me, and sometimes you don't give me the best deal. So it was something that it was kind of like you were pissed off at the business down the block who showed people that, hey, this is actually, we should be giving this to you for free, and because you showed the public this, we're gonna run you out of business, and we're gonna um besmirch your reputation. And I think they got caught up in that, and they were the whipping boy because of that. And I think they did a lot of good to this industry to this day. So I'm happy to see them come back. I'm happy to see them now have a platform where you can access it via the web on your computer. And anyone who starts out with a Robinhood account, I think it's a good thing, because a lot of times you have to pay homage to the people who open things up for you, even though that may not be the same people who you stick with forever. they did a very good thing. And they are a decent company, and I'm happy to see them coming back. Um, last quarter they didn't do as well as people expected. Um, but people have high expectations of them because of what I've said. Um, but they are making money all this time. They have been a company that has been making money, even though people like to talk caca, even when, hey, people say, oh, they're not going to make it, all of this kind of stuff. They pick themselves up, and overall, they've done well. They've hit hard times, don't get me wrong. They have hit hard times, but overall, I think they've done well. And I'm happy to see that they're back making money, and they didn't they've come back, you know. So today Robinhood is coming back. So it started out, it got to the highs of around 66, got down really low, had some trouble as people migrated to other platforms when they also became free. And now it seems to be growing, coming back. It's the last this base right here that it has of around 40, 41, whatever this is. It seems to be establishing itself right here, and it seems to be breaking out. So I'm hoping it's creating a new level. I think Robinhood's good for a nice long, and yeah, overall I like Robinhood. Um, Coin, uh, 8%, over 8% today, is because basically Bitcoin is doing well, cryptocurrency's doing well. So because of that, um, you know, uh, it is what it is. So coin's gonna do well. We talked about Tesla. 23andMe, this thing is garbage. Literally garbage. This is Carvana. No, I'm sorry. This is Avis. Um, let's see how this is. This is still sticking around. Believe it or not, it's a lot stronger than I thought it would be. Let's see. It's taking a few dips, gotten down to 67. Um, we had like that 150 area. Let's see. It's missing earnings and revenue for the last 3 quarters, and it's still maintaining itself. I don't know how it's doing that, Elisa, but I do know that eventually the floor's gonna fall in. The ceiling's gonna fall in. I like this as a short. Um, but this is one of those stocks where the volume is never really high. But eventually this is coming down. Like it or not, it's coming down. If you want to try to wait to see if you can get it close to 100, that's fine. But hey, Ms. Munoz, I think we should put uh an order in or something in for 100 or better, because I do think um if it does hit 100, I do think it is a nice short. Um, Maybe I would do that with my cash account. Um, so that's Avis, it's CAR, the car rental place. We're not gonna look at any of these things. Peloton, this is another one. It's similar to Open. Peloton is that exercise thing that became famous during COVID. Um, and people paid ridiculous sums to buy a treadmill that you can put online and then pay a subscription fee. As you can see, it got up to, I don't know, 180. I thought it had got up to 190, but it was another IPO back during COVID, and then it just fell like a rock, and it just continued to slide. We made a good amount of money on this thing, going back and forth with it. But like I said, um, it's at a level that I think we tend to like around this $9 level. Um, uh, but and it's gone down very low to 285. It did start to make money. Um, quarter four didn't do too well. Quarter one, um, hmm, yeah, it's. I don't think people are still buying this, so I do think it will be coming down again. But again, it moves 64 cents a day, so you're just gonna have to wait. I do think this is a decent level. Maybe if we had got in around Christmas when it jumped up to like $10, $11, that would have been even nicer if we had been paying attention. Because at that price, it's gonna come down. But yeah, you know, it's one of those things that it will be coming back down. And it is at a good level where it can be shorted. That may be what you may want to look at for shorting. AMD, we're not going to talk about that one. That was 3% over 3%, nearly 4%. Um, it's been going down lately. Um, this is another computer chip company. But it hasn't been doing as well as companies like NVDA and others. So you know, I think it's been meeting its goals and everything, but it just hasn't been doing as well. Bank of America, if you like bank stocks, that's great. Sometimes I like them.
It has earnings tomorrow morning. Yeah.
Oh, I'm guessing, oh, Bank of America has earnings. And Bank of America has gone up like crazy. It's a bank, people. It's not going to lose money no matter what. Banks, they don't have to have, banks makes money in so many places. They don't just need housing loans. Um, you know, it's back up at its 52-week high levels. It had hit it back in 2022. It's back up here again. It will probably, go back and forth around these new 52-week high levels. Um, but it is coming a time for it to be shorted. Um, I don't know if it will get to $50 like it did, but if you want to buy this in average in, this is a good short here right now because it will be coming back down to this $30 to $25 area. So I do like it as a short, honestly. I'm looking at this, like, yeah, you may have to wait. It looks like it takes a year almost. Well, and let's see, January. Uh, yeah, it looks like it takes about a year, or maybe more. Let's see. Yeah, maybe a little bit over a year to move all the way down. But you will make your money, even if you want to get halfway down. But still, there's money to be made here. It moves 88 cents a day. Um, it's a slow mover, but if you want something that, hey, you can buy, you can come back to and say, hey, buy at 50 or 45 or start averaging in at 47 all the way up to 50. And if it gets to 55, you may want to just sell it and start over again. But or 56, sell it. But if not, I would buy it between 45 and 50 and then set it to sell half of it at 30, maybe the other half at 28 and just keep going from there. But it's a good set it and forget it stock. And it looks like it's kind of like McDonald's. It'll move on clockwork. It'll take time, but it'll move. NFLX, also known as Netflix, it seems like it's gonna reach 1,000. These are all 52-week high levels. These are new highs for these stocks, okay? So this should be turning down. This is a good one that should be a short at least until 700, 710. But it's hard to say, hey, sure, nearly $1,000 stock and just wait for it to go down because people don't have money like that. But if you decide to buy one or two shares of it, and let's see, you got it at this price, or try to see if it bumps back up again or whatever, and you sell it, even if you buy it at this 850 price and sell it at 710, that's still what, $140, you know? And let's see, that takes, what's this, August, September, October to November. That's 2 months. So let's say it takes 2 months to get down here. That's still $140 per share, you know? Two shares of that is what, 280, you know? That's something. If you can only buy two shares of it, still, that's still money. And that's a sit it and forget it stock. And it may continue to keep going a little bit further down, but definitely it's gonna hit this level and then decide whether it's going back up or not. So I like something like this where you can do a 900 buy, or if you want to wait till it comes back, do a 850 and then a sell. I mean a short. You're gonna short this because it's going down, and then after you short it, then you buy it back and you borrow the stock and at the higher price, and then you buy it back at the lower price and you pocket the difference. So that's that. I only have a few minutes, so I'm not gonna get into everything, the usual stocks. I'll let my amiga do that. Uh, if she wants to call out anything, we'll look at it.
Can
Apple,
you, can you look at your mRNA?
Apple, it's it's kind of a $5 moving stock, but it's relatively so. It was strong today, just like everything else was. Um, mRNA. I had been Moderna. I had been um trading this the last few weeks. It was kind of, I guess you could call this strong, but then it came back down. Um, I would have shorted this. When I saw that it went up yesterday and then in the market came up, if I had the chance, I'll I would have tried to short this because I would have known it's going to come back down at the end of the day. It's a relatively weak stock. If it gets up to this 46, I definitely short it. 45, 46, I'd absolutely short it. It's very weak. We're going to get out of the area of the cold season. So yeah. Um, EBC's back up on its way up to 18. So um we like this stock. Um, you know. So yeah. That's all guys. I'm gonna stop there. I kinda was ham-fisted today and got caught up just talking about certain things. But I kind of didn't want to review everything today. I just wanted to talk about some basic stuff. Have a good day. Please like and subscribe, and we will see you tomorrow.